Welcome back to Wealth Signal. I'm Alex Carter, and what I'm about to share with you today explains why Apple just raised its prices and why 4 stocks are sitting in the middle of the reason.
A memory shortage just forced Apple to raise its prices. That one sentence tells you everything about what's happening in the market right now. 4 stocks are sitting right in the middle of this story, and one of them is already up more than 800% in a single year. I went through the actual numbers behind this rally, not just the headlines, because when a stock moves this fast, the question that matters is whether the business behind it can keep up.
If you want more breakdowns like this, where we go past the hype and into the actual numbers, hit subscribe before we get into it.
Today, we're looking at 4 memory and storage stocks at the center of this shortage. What's driving the demand, where the risk is hiding, and which of these 4 actually deserves the attention?
Stock 1. Micron. Micron. For years, this was the stock nobody got excited about. A cyclical chip maker that traded cheap because memory prices swing up and down hard. That reputation is gone. Micron isn't just a memory company riding a cycle anymore. It's become one of the main suppliers feeding the AI data center build-out. And when AI companies need fast memory chips, Micron is one of the first names on the list. The company is heading into earnings with sales growth guidance of at least 262%, and recent earnings growth north of 900% year over year. Even after the stock's run, its forward price-to-earnings ratio is sitting just under 10, low for a company growing this fast, mostly because memory stocks have always carried a cyclical discount. Here's what concerns me as someone who looks at these moves carefully. The stock has already gone from around $816 to over $1,000 in a matter of days. That kind of move doesn't happen because fundamentals changed overnight. It happens because money is pouring in, and crowded trades can reverse fast. This isn't a stock you chase after a vertical move. If the order backlog, reportedly stretching 2 to 3 years out, holds up, the long-term story stays intact. But the smart move is watching for a pullback rather than buying into the peak of momentum. Micron gets most of the attention because it's the biggest name in this story, but it's not the only one making money from this memory shortage. If you're finding this breakdown useful, drop a comment and tell me which of these 4 you think has the most room left to run.
Stock 2. Seagate, STX. Seagate. Most people know it as the company that makes external hard drives. That's not where the real story is right now. Seagate's reputation for reliability, the kind that matters when a drive can never afford to fail, has made it one of the preferred suppliers for solid-state storage in data centers. That's a very different business than selling backup drives to consumers. Its data center business has become the growth engine, and the company's recent sales and earnings numbers have come in well ahead of where analysts expected. The stock is up more than 700% over the past year. What gives me pause here is valuation. Solid-state storage tends to command a higher multiple than traditional memory, and Seagate is trading at a premium to Micron. That premium has to keep being justified by execution quarter after quarter. If you already own this one, there's no reason to panic. The trend is intact. But if you're looking to start a position, this is exactly the kind of stock where waiting for a dip matters more than chasing the headline. Now, 2 more names round out this memory story, and depending on how you look at them, the differences are smaller than you'd think.
Before we continue, throughout this video, I have been referencing visuals and frameworks designed specifically to make these ideas easier to absorb and remember. I have compiled all of them into a single visual summary file for this video. If you want to download it and keep it as a permanent reference, I have set up a Wealth Signal Telegram channel where the file is waiting for you. And it is not just this video. Every video we have done before has its own file in there, and every new video we release, the summary goes into the channel first. So if you want this file, and you want to be first to get every future one, The link is in the description below. Join the channel, grab the file, and I will see you in there. Stock 3 and 4, Western Digital and SanDisk. Western Digital and SanDisk are the last two names in this story, and they're often talked about together because they compete in the exact same space. Both companies make the storage hardware that data centers and consumer devices depend on, and both are riding the same wave of memory demand that's lifting Micron and Seagate. Looking at analyst revisions, earnings surprise history, and margin expansion, SanDisk currently scores slightly ahead of Western Digital. But the gap is small. Both are benefiting from the same shortage, the same pricing power, and the same data center demand. Here's the honest concern with both of these. They're earning a good, not great, grade compared to Micron and Seagate. They're winners in this story, just not the leaders of it. If you're looking for exposure to the broader memory and storage trend without picking a single, best name, owning a basket that includes both can make sense. But if you're trying to choose just one, the data slightly favors SanDisk right now. So that's all four names. Now the real question, does this story still have room to run? Or has it already gone too far? If you're new here, this is the kind of breakdown we do every day, like the video, so more people can find it. If I had to rank these four, Micron first, because of its position as the fastest and most reliable supplier. Seagate second, for its strength in data center storage. Then SanDisk and Western Digital close behind, both solid, neither clearly ahead. Here's the thing about a story like this. A genuine shortage is real. Demand from AI data centers is real, and the pricing power these companies have right now is real. But a real story and a fairly priced stock are two different things. The job isn't to chase whichever name is moving the fastest. It's to understand why it's moving, and to know the difference between a business getting stronger and a stock getting expensive. This is my read based on the numbers available right now. Your situation, your risk tolerance, and your timeline might be completely different. Always do your own research before making any investment decision. If this helped you see this memory story more clearly, hit like. It helps this video reach more investors who need to see it. Subscribe and turn on notifications because we cover stories like this as they develop, and drop a comment. Out of Micron, Seagate, Western Digital, and SanDisk, which one are you watching most closely right now? And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Next time, we're looking at the other side of this AI build-out. The infrastructure names that are quietly benefiting just as much as the chips themselves. I'm Alex Carter, and I'll see you in the next one.